In this video, traders, we're going to look at, is support and resistance a fallacy? Does it really exist? Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so this question came in and it's a really good question, right? Because it shows that he or she is actively questioning everything they hear and read about trading. They're not taking it for gospel, they're thinking about things, they're asking the questions, and that is the sign of a great trader, not just taking something as written and set in stone just because everyone says it is, thinking about exactly why it works. And then you start to go down a bit more of a rabbit hole of, hey, why does it work? And so when you start to understand why something works a bit better, you feel more comfortable pulling the trade. So actually asking a question, ultimately several steps down the line, should lead to better trading performance. Okay, so let's see if we can answer this question. So is support and resistance a fallacy? Is it just made up? Is it just coincidence? In other words, are we hitting a level, it's just randomly bouncing? Are we hitting another level, it's just randomly bouncing? Or is it doing it maybe the second and third touch just because other people see that it's doing that? Is it a fallacy? Is there anything to it? Well, first of all, I want to kind of introduce you to the idea of looking what happens under the bonnet, under the hood, if you like, wherever you are in the world, as to what's going on at these specific price levels, at the support level. Now, I've drawn a little very rough chart here, and we've got a support level here, 3 tags, and we could argue that that is a decent support level if it's on a daily chart. It's touched it 3 times already. Generally, that is what we would use to define support. Okay, so we have 2 things that are defining whether the market is going to bounce at a level or not. We've got 2 inputs basically. We've got sellers, we've got buyers. Don't forget, for every buyer we have to have a seller. But for the price to move lower, sellers are going to be more and more aggressive. So when we're looking at the price ladder, and this is kind of, I'm going to very briefly go into this. I've done a much more in-depth video about the price ladder. We have a scenario where price will move down, i.e. we'll get a print lower and lower and lower when sellers become more aggressive and buyers become more passive. If sellers are prepared to sell for 99, then they're prepared to 98 and 97, and that outweighs the amount of buyers that are prepared to buy. Buyers will get a cheaper and cheaper price. Sellers will have to pay less and less and less, not really what they want, but that's what causes price to go lower. Now, and vice versa to go higher. Like I say, go and check out another video I've done for a real in-depth look at that. Now, if we look at what happens at support, when we get to support, we get an instantaneous time when sellers and buyers are matching. Now, we could have multiple things happening here, and bear with me on this one. We could have literally 1,000 sellers all selling massive size and exactly the same amount of size of buyers, we would still have support, right? You could have all the stock in the world being sold, all the stock in the world being bought, not all the world, but you get really massive volume and you'd still get a level of equilibrium. Same if you had 1 share being sold and 1 share being bought, you would still have equilibrium. So we have equilibrium at that point. What causes that point to hold and lift back up? A couple of things can happen. Number 1, we can have 3 things can happen in reality. We have sellers become less. So let's say they are now divided by 2. If the buyers stay the same, that pressure is now going to shift up, right? So sellers back off when they get there. Why would they back off when they get there? Who knows why they do it? Perhaps they feel that it's come down far enough. They don't want to pay any lower than 96. They're happy to pay, happy to sell at 97, 98, 99, 100, but 96 is too cheap for them. You know yourself, if you're selling your car, your house, there's a price level you won't sell it at because you don't want to sell it at that. It's the same for anything. Okay, so we can have sellers then chop off by, let's say, half. If buyers remain the same quantity each level going down, what's going to happen? We're going to stop at that level. We're going to bounce back up. So that's one way you could do it. Another way that would cause us to find support is that buyers double. And by the way, I'm just using these numbers arbitrarily. You can see why it only takes a little bit of difference for it to move away from equilibrium. Sellers remain the same. Suddenly buyers double and it starts to lift back up. And that will cause momentum as buyers become more aggressive, more aggressive, more aggressive, more aggressive. So that level will hold because buyers are stepping in. Why would buyers step in there? Just like you would do if you are buying something yourself. You think it's good value, you think it's worth buying for whatever reason, and it's a price level that attracts more people in. All of a sudden that equilibrium is shifting. Now, of course, we could have a double effect in that buyers step in and sellers back off. And that's when you get these really aggressive bounces at support and resistance, i.e. sellers halve, buyers double. You can see now we just get a massive shift in supply demand. So going back to the question of of? Is it a fallacy? When you start looking under the bonnet and seeing what exactly is happening, and you can often see this, for those of you guys who like watch level 2, watch the time and sales, that kind of stuff, you can see this actively happening at these key levels. So it's not a fallacy as such, because people are changing sentiment as we get to a key level. And then the question, I know what this guy or girl is asking, is basically, hey, is it a fallacy because the second and third time we touch it, are we just bouncing because other people are looking at it? In one way, that is part of the reason people are coming in. People are coming in because they believe that's going to help. People like you and I who are buying at support are going to do that. However, it may well be the case, and more likely the case, the majority of the reason why the support is going to hold, is that this kind of formula is the same each time we go there. This price level, whatever this may be, let's say it was our 96 level, this price level is meaningful to people with big volume, i.e. the buyers believe it's good value, so when it comes to 96 again, they're going to buy it. Maybe they buy a little bit more, pay up to 100, think it's not very good, it comes back down again. They think, yeah, it's great, more buyers step in at 96, so it pushes back up, it creates that support. And often you see this when you look, say, at the time and sales or the market depth, big stacks of buy orders, whether that's actually visibly in the book or whether that's an algo who is putting a small amount in, then pushing more in and more in as that gets filled. But the important thing is if that's a big, if you've got multiple buy orders sitting there, price comes down, it sells a little bit into the buy orders, others then come above it and jump to 97, we then start the rally back up, comes back down, holds again. It's basically when there is a massive amount of buyers sitting there, or like we say, sellers are backing off. So mostly it's going to be our buyers, but if sellers back off, it's the same kind of thing. That's why we get that finite support sometimes. So going back to the question again, is it a fallacy? Yes, of course, sometimes it is, because people do step in and see its support. So that's why support can get stronger and stronger. But the reason there's support is because we have bigger players who are stepping in at that level as buyers or shutting off as sellers. Like I say, sellers could sell it down to 96 and go, you know what, I don't want to sell it any lower than that. They back off, buyers step in, we get the pop back up, we get this. Sometimes we might not revisit and it might end up going off up there, never to see that level again. We don't know. So you have a little bit of a double whammy. It's not a fallacy as such in that it's just happening based on a randomized point in time. And of course, some turning points are just reasonably random. They happen because we happen to have sellers and buyers change supply and demand. But for me, true support, true resistance, it's going to have multiple tags, and that generally means there is someone of interest there, whether it is the seller, whether it is the buyer, and that by default brings in additional people who are trading for short-term gains or trading for kind of speculation purposes, who will step in front of that support, who will think, okay, well, if it breaks through, I know some people have stepped in front of it, I'm going to ping their stops, that kind of stuff. So that's what happens to support, guys. Flip it for resistance. If you start thinking in terms of that a little bit more and kind of digging down, and some more research is maybe worth kind of checking out some things on, let's say, price action, market depth, level 2, that kind of stuff. And if you see some screenshots and what have you, you start to see and start to picture how these sellers and buyers interact with each other, and that might make more sense when we talk about support holding or resistance holding. All right, guys, see you in the next one. Take care. Keep your risk managed. Bye-bye.